How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 with my Vanguard brokerage account. As of right now, we're sitting at $83,540.05. That is back up from my last video by $2,537.27. Now, in fair disclosure, over the last handful of days, I have completely unplugged from all things Blue Lion Finance as well as the stock market.
Say what?
I've been out visiting Arizona, everything from the Grand Canyon to Sedona. Absolutely beautiful hikes, but ultimately where that now leaves me is playing a little bit of catch up with what's been going on in the stock market. And from what I've been able to gather over the last handful of hours or so since I've returned, is the very fact that a lot of investors out there have seemingly quelled their fears about the Omicron variant, which is good news per se. I believe that there's going to be some volatility coming about after 2021 is officially over, once we realize that inflation is still on the rise and of course coronavirus has not gone anywhere. But for now, I see us closing out the year in green, which leaves me looking for those high quality stocks that I can double down on and at least invest into before the year is over, which brings me into today's video, which I'm going to be going over 3 stocks that you can absolutely get invested into today that are definitely undervalued. And if you just hang on to them for the long run, you should fare very well come your financial future. Now, before we dive in, go ahead, tap on that thumbs up button as it greatly helps me out in growing the Blue Lion Finance channel. If you haven't done so already, tap on that subscribe button while you're at it. I'd love to have you along this journey with me. Now, YouTube, let's go ahead and dive right in. Just before I dive into these 3 stocks I have for you today, what I want to talk about is what exactly has been going on in terms of the stock market. Backtrack just a little bit here, because at that macro level overview of an understanding, we will be able to make better, wiser investment decisions for our own personal portfolios. And as the person here creating these videos for you to at least take something out of, that is most important for me. So ultimately, going back a week or two, we can see that the stock market experienced a ton of volatility after the news of the Omicron variant came out. It spooked a lot of investors, and ultimately we saw this massive market dip, which is just an opportunity to buy stocks on sale. Some of my favorite days are, of course, those red days. And now here we are once again experiencing a market rally. This is nothing we have not seen before. I mean, time and time again in the last year or so, the new variant comes out. From there, we're hit with a ton of fear. There's a pullback and then a rally. Now, all through this time, we've certainly been keeping our eyes on the inflationary rate. It's been on the rise. Currently, it's sitting at 6.8%, a surge we have not seen since 1982. So something to just be aware of course, on the back burner. And as we end 2021, I do believe it's going to end in green. But ultimately, at a week or so after that, I'm really thinking there's going to be some volatility once we realize that a new year does not bring about a brand new stock market. So with all of that on the table, with the current rally that's happening right now, where exactly is the gold? I want to kick us off by talking about Verizon, ticker symbol VZ. Verizon is one of America's largest, most popular telecommunications conglomerates. Of course, they are a world leader when it comes to wireless networks and connectivity. In the last 3 months or so, Verizon has lost a ton of steam. I mean, dropping by about 10% of its value. We can see their stock share price fell from around $61 per share down to around $50 per share. And honestly, there's no real evidence as to why, especially in taking a look at their very healthy metrics. We can see they brought in $4.59 billion in December of 2020, moving into March, $5.25 billion, June, $5.8 billion, and then into September of 2021, they brought in $6.41 billion. So again, just no real signs of any revenue struggles, and ultimately an opportunity to buy Verizon while it's on sale. Now, the best possible news is that analysts believe Verizon is going to continue to rise. I mean, at a median stock share price of $59.50 and a high stock share price of $71 per share. Now, if you're that dividend investor out there, you take advantage of Verizon's dividend coming in at a dividend yield of 5.07%. Again, an incredibly reliable, stable company that the long-term investor can get into today and fare very well come their financial future. Now, moving on to stock number 2, we have Medtronic, ticker symbol MDT. Now, Medtronic is a medical device company that has been revolutionizing the healthcare industry since 1949. I've spoken about Medtronic at least a handful of times in the last couple of weeks because it's an undervalued stock opportunity that I personally believe makes a perfect fit for a dividend investor's portfolio. just taking a look at what's been happening to it in the last few weeks here, it has certainly been beaten down. I mean, dropping by about 20% from around $135 a share down to around $112 per share. Now, ultimately, it's well worth noting that medtech companies across the industry have been impacted by the supply chain disruption. Medtronic was no exception to the rule and ultimately missed on their earnings report, creating that massive opportunity now to buy in on such a high quality stock while it's on sale. Certainly, analysts only believe that Medtronic is going to continue to grow, coming in at a median stock share price of $142.50 and a high stock share price of $155. So given it's currently sitting at $112, definitely room to grow. And until it reaches those stock share prices, we take advantage of Medtronic's dividend, as it's currently sitting with a dividend yield of 2.24%. Now, talk about reliability, as Medtronic has been paying that dividend out for 44 consecutive years, increasing it year over year, nearly a dividend king and the perfect stock to add to your dividend portfolio. And last but not least, we have our third stock opportunity on the day. Now, this one is not a dividend investment, but certainly a lucrative growth investment that you can make today, at least in my opinion, and ride that wave of recovery only to reap the benefits of then trading it in for perhaps a dividend investment. This company is Hexcel Corporation, ticker symbol HXL. Hexcel Corporation is an American industrial materials company focused on the development and manufacturing of structural materials specific to the aerospace industry, talking about honeycombs, adhesives, and carbon fibers, all of which are an absolute necessity for the airline industry. So a company that's not going to be disappearing anytime soon. But as we all know, during 2020, a company like Hexcel Corporation was devastated, falling from around $80 per share down to around $26 per share. That is exactly where I came in to scoop some of those shares up while they were heavily discounted. Now, the good news for you is that they are still lingering around $51 per share, so you can still catch it while it is on sale. Now, I currently have 13 total shares worth of Hexcel Corporation. I'm just going to hold on until a full recovery and even may buy some more shares while they're currently on sale. Now, ultimately, analysts have expectations Hexcel Corporation will in fact recover, jumping to at least a median share price of $60 per share and a high stock share price of $85 per share. Now, again, it is not a dividend investment, so I will not be holding on to this company for the long run. That's about 5 to 10 years, but I certainly am going to ride the wave of recovery and then ultimately trade it in for a dividend investment. Now, YouTube, that is it between Verizon, Medtronic, and Hexcel Corporation, the three stocks I'm throwing at you today. If you like what you heard, you learned something new, drop those comments below. I'd absolutely love to know your thoughts. Of course, I'm not a financial advisor, so do your own due diligence prior to investing in any of these companies. But before we conclude, tap on that thumbs up button, as it greatly helps me out in growing this channel and getting the word out there. And of course, if you haven't done so already, tap on that subscribe button while you're at it. I'd love to have you on this journey with me. Now, YouTube, I'll see you in the next video.